folks, Scott here, and this is the wrap for Friday, October 4th. So this is my unfilled gaps indicator. It's available at no charge in our members. I think it's in the members download area, certainly in the discussion forum as well. And you can change the settings. It's for TradeStation, and we have various other brokerages too: TD Ameritrade, Multi-Charts, Thinkorswim. I don't know about Interactive Broker. Someone asked about that last night. So if any members have any Interactive Broker indicators that you've created or had someone create and are willing to share them at no charge, please post them in the discussion forum. But I digress. This particular unfilled gaps indicator allows one to see any gaps that weren't filled, and you can change the proximity to what you consider to fill. I normally have it set to anything that comes within a point is to be considered as having filled. I think since it's using the daily chart here, it's using settlement, so it actually considered today's gap to have filled when I had the original setting. I just turned it off, and you can see it's showing today's unfilled gap here. So we got a couple just above as well. So what I wanted to show you is going into Monday, what are the results of fading gaps after a 10-day low, while below the 10-day moving average and above the 200, and on the heels of an unfilled up gap. I'll use Gap Trader, my back testing tool, which we've got a special expiring on Sunday, which I'll talk about in a moment. And there you go, 50-50 in terms of which way you're likely to gap. Using an end of the day stop, it's made some money on the downside and the upside. But the sample size is a bit small, a little bit more rare of a pattern than I would have expected, frankly. Again, looks like a decent chance of gap fill. Tough to say that there's a directional bias. Or that there's even much of an edge. My one concern here is the potential volatility after such a pattern. These numbers may not be as good when I run them with our MTG stop parameters. I'll show those numbers for our members on Monday morning, so you might want to keep that in mind. And in general, on Mondays, as a gap trader, you want to reduce position size or even consider not even trading on Mondays, especially after God knows what's going to happen this weekend as it relates to congressional discussions here in the U.S. So you want to use a little extra caution on Monday would be my advice. But at least the good news is it doesn't appear to be a terrible setup based upon this one particular scenario. All right, speaking of Gap Trader, on our website, if you go over here underneath products, click on Gap Trader or Range Trader, we have specials going on both of these. I need to update this. We've added the ability to test by gap direction, real simple concept, but you can read more about it there. Go down here to buy now and you can see what we've added. Special offer, we're trying something a little bit different this time. You can save $1,500 to get it for $4,500 for either application or $8,000 for both if you purchase by end of the day on Sunday. And what's special is in addition to that, we're going to give you lifetime email support and an additional 2 hours of one-on-one follow-up support. So in the past, we've only had a half hour. So these really are not hard applications. You do not have to be an engineer. You don't have to know how to program. That's what you're paying for. You're paying for pre-configured applications with lots of easy inputs that you can test at the click of a button. So check it out. Sign up by close of business Sunday. Thank you. All right. So let me show you the worksheet going into today. And well, first and foremost, these are automated, and because they're automated now, when the government changes its plans and shuts down, then these are going to be off. So you had to ignore the day of the monthly jobs report. But other than that, we had small gaps up, nominal gaps in the ETFs, small gaps up in the futures, and gaps between the high and the close were set up right at my minimum criteria. The average was right at 60 and 1.3, which is what I'm looking for. Odds favor extended target. I'm looking for these numbers to be at least 80% right here. And all that is just simply dividing these two numbers underneath the extended target columns into the gap fill numbers. Widespread day shows sort of a neutral setup for fading up gaps under similar market conditions historically. Looking at my pre-market comments, last night's wrap I talked about after a 15-day low on Friday. It's generally been a pretty good setup, only 5 losers, and has made a lot of money using our MTG stop parameters. Up gaps in the DOC zone were not a cowboy setup, meaning opening above the low of today's prior, did not apply today because these gaps sold off a little bit. So we did open below 1673, so it was a good setup in that regard. That's generally a positive. So you can ignore this data here because we opened at 1672, I think 50. So overall the guides were slightly attractive. When you look at the individual guides, which I did not take you through just now, I just showed you the summary on a worksheet. So they were slightly attractive. And I said mixed factors for fading up gaps, but really that applied when you consider it not being a cowboy setup, which I just told you, because we sold off a little bit in the open, that was not the case. Key concerns were large closing variance for futures and ETFs. 4 p.m. close is 1671.50, and the 4:15 close is 1669 even, I believe, so almost 3 points. And we opened just above that, so we lost a little bit of that potential momentum to fill the gap, unfortunately. Short-term oversold conditions. That should be pretty clear looking at the charts I just showed you. Headline news risk from Washington. So that said, it was worthy of trading with a half-size position. Full disclosure, my first post did not have position size. I corrected it within certainly no more than 2 minutes. So always check back if you're not sure. I normally have exactly what I'm going to do by 9:25, and that was the case today. It's also a benefit of being in the trading room, but because I posted in the trading room. In the details ad nauseum, or at greater length and detail than I can do here, obviously. So that was my plan, a reasonable plan to risk a half-size position, and I went short, and unfortunately was stopped out. The small gap, we didn't have any momentum on the ETFs. Let me show you the ETFs first. See that we opened just barely above it. So it wasn't a lot of the little white dotted line. There was no gap in the Qs, for example, nor the Dow. So you didn't have any momentum from those indices going down. And we had settlement at 16. It was right between these two. I don't talk about that much anymore. But looking on a daily chart, it was 1669.75. We went down 2 ticks above it and held and reversed. So it missed triggering my proximity rule by the slightest of margins. It went 2 points and needed to go another, I think, 2 ticks to trigger my proximity rule today. So there was nothing I could do but sit there and hold on, and I got stopped out for a loss on a half-size position. Disappointing. Probably the best thing is it was a traded half-size position and told everyone in the trading room the risks were clear, and this is just one of those scenarios. There, more times than not, it's going to go down and fill its gap, then reverse. Today just didn't happen. And the logic, by the way, because I got a couple notes from folks that they were shocked that these gaps didn't fill with the craziness going on in Washington. And what I reminded them was that Washington has seen this coming for a while and has already been positioned short. So knowing that the government's already shut down, the greater risk right now for the bulk of capital is to the long side. So I told folks right off the bat this morning, you may see some short covering as folks try to lock in profits and close their shorts to avoid any weekend news risk where the government may finally come to an agreement and open back up. So that's what happened today, unfortunately, and I had a loser. Someone I traded with said it was the first loss in 4 months. I don't think that's the case with me. I think I've had a couple, but it's been a good stretch, no doubt about it, for the past for the whole summer. So nothing to complain about really too much here. Just they're always disappointing. The range trades, I didn't see anything that was worthy of trading, and was too busy tied up on a lot of exciting stuff. We've got closing guides coming to master the gap soon. I promise. The research is done. We're just trying to get them in production ready now. So there'll be closing guides added to your membership account at no charge. So I'm very excited about that, and those will show the odds for where the market's likely to close by the end of the day. You can use them to better hold on to winning gap trades and or winning range trades. Anyhow, I was tied up doing that and did not get to do the gotcha at the end of the day, though I do know some folks took it and made a little bit of money as we broke to the upside here. So that was my day, and we'll see you Monday. Have a great weekend.